Welcome to this week's live ASX strategy session. Thanks for joining me. Great to have you with me. Plenty of stuff to go through today with the ASX 200. We've got the commodities, gold, copper, oil, uranium, a couple of interesting stocks to have a look at a bit later on. And of course, all the questions you have and stocks you want me to have a look at. So plenty to do. A lot of interesting things for today. Now, first of all, everything today, general commentary only, doesn't take your personal situation into account. Having been through all that, let's jump straight over to those charts. First of all, ASX 200. And this has been, well, after the extraordinary gains from earlier in the month, ASX 200 has had quite a week. Currently, it's trading just a fraction above last Friday's close. So really, not a great deal of movement overall for the week. So the question is this just a brief pause before new all-time highs, or is this all starting to stall and starting to pull back? What I want to do today is look at both the ASX 200, which we have here, as well as the ASX 200 on an equal weighted basis. And just to distinguish between the two, of course, the ASX 200 is market cap based, market capitalization based. So the biggest stocks have the most influence. The equal weight, the 200 stocks are all ranked or weighted equally. So the smaller stock in that group has as much impact as the larger stock. So I think the equal weight gives an important perspective that we don't necessarily see when we look at the ASX 200 in its traditional form. So I'm going to come back to this chart in a moment. Let's start today with the ASX 200 on an equal weighted basis. So here it is here, ASX 200 equal weight. And I think this is an interesting index to keep an eye on. Almost all the attention goes to the regular market cap based ASX 200, but the equal weight can give us some important insights to how the market is structured. I think it can help us make an overall assessment of the health of the ASX 200 without some of the distortions that sometimes come with some of those big cap stocks moving the index around. So let's analyze this chart as it stands. So from the October low, we have got a strong rally off last October's low, and then that's been followed by 5 months. This is a 5-month period of sideways price action. We can actually just draw that in. Let me put a rectangle around that price action. So there's our last 5 months. So a rally and then a consolidation. It's also interesting to note where the consolidation has been playing out. So you'll see this horizontal band through here around 1,840 marks some previous highs, as well as capturing the lows in more recent times. So we had a rally, we had a breakout above this resistance, and now we're seeing the market consolidate above the old resistance, which now becomes support. So all of this creates a bullish structure. We have the rally, the breakout, and the consolidation. And what's been interesting has been the two attempts to break from this range. So there's been 2 attempts to break from this range just really in the last 6 weeks. First was to the top side, didn't get too far, just got a smidgen above the previous high. And then we had the break to the downside just in the recent sell-off that's occurred. And both of those breakouts failed. Both failed to attract either follow-through buying or follow-through selling. And I think the downside break, I think this break to the downside was the most telling at the point of maximum fear. So just think back 3 weeks ago to the report you were seeing on the news. It was headlines. It was the first story, market down 3 or 4%, whatever it may have been on the day. It was a headline making sell-off, so maximum fear. So from that point of maximum fear, the market snapped right back into the back towards the upper end of the range. So there was no appetite to take prices lower. more so than anything, I think that it shows that the path of least resistance, I think it remains to the upside. And just look at the structure of this trading range. The price action, it's choppy. It's choppy. It overlaps. It doesn't go anywhere. These are the hallmarks of a corrective phase, and I think it's a corrective phase to the previous advance. So then that implies that the next move probability favors, I think, a move to again the upside. Uh, it's also the other thing which is interesting. It's also been shallow. So look at the extent of the advance, and then look at the consolidation. It's a shallow pullback relative to that rally off the October lows. In my experience, this type of structure, it often resolves to the upside. So this is the S&P 500 on that equal weighted basis. It gives that perspective, which we don't get as clearly when we look at the ASX 200. So let's come back across to the ASX 200. And what I think is interesting here is that the range that we were just talking about on the equal weight, it's not as clearly defined. It's not as clearly defined when you look at the market cap based ASX 200, and this is of course because the movements in the larger stocks can mask what's going on in the broader market. So we're seeing more of the fluctuations in the likes of BHP and CBA and the like. But the underlying situation, I think it's very much the same. It's a large rally, the consolidation. We've got the false breakout to the upsides. That was telling us that the market wasn't ready to extend higher, and then we had the sharp fall, which didn't attract that ongoing selling, which again tells us that there just wasn't that appetite to take the market significantly lower. So I think the overall structure here, it remains bullish, but the recent failure to sustain this breakout, this was about 4 weeks ago. I think that just tells us there's a good chance we see the ASX 200 consolidate further. I think there's a good chance we see the ASX 200 come back to these moving averages. So I've got the 50 and the 100-day moving averages. If we do see the market come back to these averages, or we see it chop sideways, let the averages catch up, maybe that then produces the platform for potentially getting further strength later in the year. But I don't think we're at the point where we can look for significantly further strength from this point just yet. I think that consolidation remains. I think that remains the most probable scenario leading into the next few weeks. I think the play here is stay long. I think it's use those wide trailing stops, just try and see off any further consolidation or pullbacks we see in the market. But I think it also is about being patient with waiting for the right entry setups. Big rally off these lows. A lot of stocks have had a good run. Wide trailing stop strategies could have seen off this pullback to a large extent. But now getting money back into the market at this stage, I think we can be patient. I think we can wait for the right setups. I don't want to chase stocks that have already run hard in the last 3 weeks. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just thanks for the video. Just tells YouTube you're watching. YouTube shows other people. It helps me heaps. So please do those things. Now, we're going to move on to the small caps and the commodities and a couple of stocks, as well as any stocks you want me to have a look at for you. Just give me the stock code. We'll get the chart up. We'll have a look through it. But of course, that wraps up the free section. So if you're not a strategy session member, there's a link below. Click it. Costs you very little. I think you get a lot of bang for your buck. So think about coming on board and having a look at what else happens. So okay, let's move across to the small ordinaries.